Yeah, welcome to the chat. On today's lesson, we need to identify the things that we must always see before we commit to a trade. You need to understand that in the market, whichever decision you are making, it is based off the decision of people or forces who are of the same perspective as you. However, these forces, you must know that they are stronger than you are, they have more money than you have, they have more contract sizes than you have, and they are of stronger belief than you are. So now, where are we driving our point to? We need to understand that in the market at all times, before we buy or sell, we need to already identify pre-existing buyers or pre-existing sellers that have sold the market to a certain level that gives us confirmation to buy or sell. Without seeing these buyers or sellers, without seeing these pre-existing buyers or sellers that give us a confirmation to buy or sell, whatever we are doing in the market is pure gambling. Whatever we are doing in the market is pure irrational, because either your setup is based on fundamentals, either your setup is based on technicals, either it is based on indicators, price action, or whichever setup it is you use in the market, you need to see these pre-existing buyers or sellers, because without these pre-existing buyers or sellers that have bought the market to a certain level to give you confirmation, or that have sold the market to a certain level to give you confirmation, without seeing them, we need to stay clear from the market. That is why the language of the market is all encoded in the candlestick. It is also all encoded in the line chart. The line chart comprises of the close of all assets. It is all encoded in the bar chart. The bar chart gives an idea into the open and close and the high and low. So all these, what the language of the market is encoded there. So whatever is ongoing in the market, these candlesticks, the line chart, the bar chart, they are talking to us at all times. That is why it is necessary to be able to understand the language of the market, because without having an understanding of the language, then how are you going to know what to do? How are you going to know what not to do? And in trading, we need to know that knowing what to do is also as important as knowing what not to do. So now we are going to take real world examples to see these confirmations, and I repeat, and I always repeat, in my opinion, without seeing these confirmations, regardless of the kind of strategy you use, you must stay clear from the market, because without seeing it, then there are no pre-existing buyers or sellers. So are you telling me that you are the market maker? Are you telling me that you are the one who wants to move the contracts with your money? Are you telling me you are the one who wants to break a certain support or resistance with your $100,000, $1,000,000, or $100 or $1,000, or whatever account size you are trading with? No, it is an $8 trillion market. So whichever capital you are bringing into this market, you just need to know that it is nothing but a drop of water in the ocean. So you need to see the wave, and once then you ride the wave. So now, how do we spot these big boys? How do we spot these market movers? How do we spot these strong pre-existing buyers and sellers that give strong confirmation to either buy or sell? So we are all going to see them here, we are all going to check them here, and we are going to see how markets react once these visual cues are perceived in the market. Because I must be frank with you, even if you are trying to develop an edge, even if you are trying to develop a system, even if you are trying to backtest or whatsoever, having this in mind, it makes it easier, it makes it faster, and it makes it more systematic for you to get what you want from the market. For the sake of those who are new, let us take less than a minute to explain candlestick patterns and what they mean. What we have right here in front of us, as you can see, price rallying up right here with a cluster of green candles. Let us mark it in a red box. These green candles, they signify buying pressure, and as you can see, price on the other hand rallying down with a cluster of white candles. These white candles, they signify selling pressure. Meanwhile, wherever you see price where it is neither green nor white, without a significant color, then what that means is that we have nothing but an indecision candle. So it means that there's equilibrium of buyers or sellers. So to recap what we said, the white candles selling pressure, green candles buying pressure, and the candle that has in that color indecision in the market. So at all times the market is either signaling to us that there is buying pressure ongoing, the market is either signaling to us that there's selling pressure ongoing, or the market is signaling to us that there is an equilibrium of buyers and sellers without the pressure being on a particular side. So now, what are these pre-existing buy or sell visual cues we must always see in the market? We need to know that in candlestick analysis we have engulfing patterns. And these engulfing patterns, they are in two variations. We have the perfect engulfing pattern and we have the breaker block. So what you must always see in the market is either a perfect engulfing pattern or a breaker block. So whenever you see a perfect engulfing pattern, then the market is saying that the market is in an extremely good condition towards to buy or sell. And whenever you see a breaker block, then the market is saying that the asset, the instrument, is in a good condition to buy or sell. Nevertheless, an engulfing pattern, a strong engulfing pattern, is stronger than the breaker block. Regardless, they both signal pre-existing buyers and sellers that are ready to push the market. So as said earlier, whenever you are about to commit to a trade, whenever you are about to put your money in the line, whenever you are about to take that risk, take that leap, do not step both feet in the ocean. And before you step a feet, you need what? You need to see the wave. You need to see the wave. So now let us get to the business of the day. This is not us learning a strategy, but this is just us having a visual cues of the things that are going to bring stronger confluences to our trading style. Regardless of the trading style you use, there are so many strategies that work, countless strategies that work. However, the best strategy in my opinion is the strategy that a trader understands best, is the strategy that a trader is able to execute best. So right here in front of us we have an example of the bearish engulfing. The first, we have an example of the bearish engulfing. Oh, the chart has moved. Here we have a bearish engulfing. The first, here we can see buying activities, and right here what do we see? Right here we can see what? We can see strong selling activities. So what the market is just saying here is very simple. The market is saying that the market is selling, the sellers are here, the market is in an extremely good condition to sell. And you can see the second candle that closed what? It closed below this and it went down even before the market jumped back to this zone. So right here we have an engulfing pattern. Right here we have a bullish engulfing. Here you can see the market is in a sell condition, and here you can see the buyers taking over. So what the market is saying here is very simple. It is saying that the market is in a good condition to buy, and we can see what happened. The market bought up. So this is these are the engulfing pattern. So now let us go and check for the breaker block. For the breaker block, the market, just like the engulfing pattern, is also telling us that we have the big players around and the market is in a good condition to buy or sell. The first candle we can see here, we can see buying pressure, and the second candle we can see selling pressure, and the third candle we can see selling pressure that completely overshadows this first buying pressure. So what the market is saying here, that's what the big boys are around, the sellers are around, and the market is in a good condition to sell. So you can see right here an engulfing pattern where we can see buying pressure, we can see selling pressure, which signals that the market is in a good condition to sell. So just seeing this, we can understand the language of the market. And what happened? The market sold from this zone. So without seeing either of these two, you can see this and this. Without seeing either of these two, you stay clear away from the market. You run far away from the market. You go further away from the market. In fact, having just this as confluences to your trading style is more than what it is, more than enough. So now we are even going to go down to the chart to take real world examples, to take real life scenarios, and to look out for how these things have played out this week, how these things have played out today, how they have played out even in the present London session that we are in. So once you understand this concept, once you are able to apply them with patience, once you are being strategic with them, it is 100% guaranteed that nothing but success is yours. So as to recap what we said, this is not a strategy in particular, however it is a confluence to whichever strategy you are using. So this is an engulfing pattern. You can see buying pressure here, and what selling pressure follows that completely overshadows this, and you can see our price dropped. So what this said is that we have key players here, we can have strong players here, and you can see our price dropped. Right here we have buyers here and we have sellers in this zone, and you can see what happened. Price retested and dropped. So that's just very simple. Right here you can see the bullish engulfing. You have sellers here, you have buyers here, signaling that the market is going to buy, and you can see how the market went up from that zone to this zone. So now let us get to the chart and let us take as much examples as we can take. I hope we understand the things we are looking out for. So now we can see on USD CHF at the top here, you can see buying pressure, selling pressure, signaling the market is going to sell. And you can see for this week, you can see how beautifully the market has been selling. Right here you can see selling pressure, buying pressure, signaling the market is going to buy, and you can see how the market bought in a beautiful manner. So why are you going to overcomplicate anything when it is all simple? So you can see here buying pressure, selling pressure, and the market sold down to this zone before the market retested this zone. Buying pressure, selling pressure, and you can see how the market sold down. So you see how simple it is. Let us go to the 1 hour. You can see right here during the London session we have buying pressure, selling pressure, and you can see how the market is selling down. Let us go down to the 15 minutes to just see how simplified these things are. So you can see here buying pressure, selling pressure, and you can see how the market sold down. So what this means, this has to close when you see them, these pre-existing orders, these pre-existing sellers that are strong. Once you see the close, then you can have your confluence and make your decision. If it does not close, you stay away. You only make sure that they have closed the deal, you make sure that they have sealed the deal, and you make sure that they have concluded that the market will be in a condition to either buy or sell. So you can see even before the market retested here, we have selling pressure, buying pressure, buying pressure. So you see every time the market is saying one thing or the other, yours is just to understand whatever it has to say. So now back to another pair. Let's just go to USD JPY. Right here you can see buying pressure, selling pressure, selling pressure, and you can see market is in a good condition to sell. You see the market sold to this zone. Right here buying pressure, selling pressure, and you can see how the market sold down to this zone. So it's that simple. You can see on Euro USD, what do you have here? We have selling pressure, buying pressure. You can see the market bought up here. Right here before this, in fact on Monday you can see buying pressure, selling pressure, selling pressure. The market sold down to this zone. Here we have buying pressure, selling pressure, selling pressure. This is a breakout block, and you can see how the market is consolidating, trying to sell, because you have strong sellers in this zone. So the sellers here, they are pre-existing. So before you make any decision to buy or sell, you already know that there are people that are also doing the same like you, that have already moved the market to give you a cue as to what the market is doing. So on AED USD, right here we can see buying pressure, selling pressure. You see how the market dropped to this zone. You can see right here on Tuesday we have selling pressure, buying pressure, and you can see how the market jumped up. So just by interpreting what the market has to say, in fact let us go down to the 1 hour to see more. Right here you can see selling pressure, buying pressure, buying pressure. You can see how the market bought up. So this zone yesterday you can see buying pressure, selling pressure, and the market dropped down. So you just look at the 2 candles, 3 candles, how they form. Here we have selling pressure, buying pressure. You can see how the market bought up on GBP USD. Here we have buying pressure, selling pressure, selling pressure, and you can see how the market is consolidating within the range as the buyers are having a fight with the sellers, and the sellers are attempting to give the buyers a run for their money. So right here you can see selling pressure, buying pressure. The market is responding to this, trying to go up as the buyers are attempting to fight the sellers in this zone, trying to push the Japanese yen to the upside. Here we have buying pressure, selling pressure, and the sellers successfully gave the buyers a run for their money down to this zone. So it is that simple. You do not have to complicate anything whatsoever. So you can see even this zone, why the market is responding here, because right here we have selling pressure, buying pressure, and there are lots of buyers in this zone. Let us mark it in a red box. So you can see even the pre-existing buyers here since last week, they are still trying. They are not toothless, they are even still trying to fight. So in the market, when you are able to read this, you are going to know the tiger with the tooth and the toothless tiger. So it's that simple. You can see selling pressure, buying pressure, and the market responded up. So we are having real life case scenario, present scenarios, what is happening right now. Not just we are just making this up. You can see how they are even performing to this day. Selling pressure, buying pressure, buying pressure. The market does not change. You can see the market is ever changing, but to me the market does not change because it responds to the same thing. It rhymes with the same. The market rhymes with the same pattern. So in my opinion, the market is changing, but at the same time the market is what the market is constant. So yeah, selling pressure, buying pressure, selling pressure, and you can see how the markets, how the buyers and sellers are fighting here. So here you see selling pressure, buying pressure. The buyers are also trying to control and create buying pressure in this zone. So you can see buying pressure, selling pressure, and engulfing pattern. The market dropped and the sellers gave the buyers a run for their money. So you can see selling pressure, buying pressure, and you can see the buyers giving the sellers a hot chase. So you can see. So on gold you have buying pressure, selling pressure, and you can see how gold is rallying down. On Tuesday we had selling pressure, buying pressure, selling pressure, and you can see how gold has been responding to that. Even though gold was in an all-time high, but you can see the market is changing its tone. Right here we have buying pressure, selling pressure, and since then the market has been going down. So it's all simple. You can see on silver, if you have buying pressure, selling pressure, a breakout block, and you can see how price is dropping. So on GJ you can see buying pressure, selling pressure, and you can see how the market is running down. So all these things, they are very, very simple. They are not complicated. All you need to do is just simplify the chart. You see buying pressure, selling pressure, and you can see how the market is coming down. So that is the beauty of knowing how to read the charts, candlestick patterns, and all. So knowing how to read them is different from knowing how to apply them. So here we are learning how to apply them. So before you even buy here, you can see pre-existing buyers in this zone, as you have selling pressure, buying pressure, buying pressure. So you can see pre-existing buyers in this zone. Let us mark it in a red box. So you know that there are stronger buyers that have already, there are stronger forces that have already moved the market. Let's go to the 1 hour. No significant pattern here. So you can see you are able to recognize the significant patterns and the patterns that are not so significant. Win today, win forever. As always, plan your trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, share, subscribe, and follow for more.